Alright guys, we're back again with another video, and in today's video, this is going to be the model that you will be seeing me take on every single trade from this point on. And you've obviously been seeing this on my previous trade breakdowns, but this is what I label as the forever model, and it is going to be a trade breakdown on Bitcoin longs that I took utilizing, as always, a market maker buy model. So before we get into the video, I kind of want to clear up some FUD in the prop firm space. If you guys are looking for a prop firm to use or trade, I would always recommend utilizing Prop Firm Match, because this is how I've been finding my prop firms to trade as of recently, given the fact that we have had, for at least US clients, I haven't been able to trade on MetaTrader, but this actually helps my way to find new prop firms that are trustworthy to use. If I simply go about my process and I pick my 200K account, my two-step, and then I click United States, where I'm from, I hit search, it gives me the full list of prop firms that I can choose to trade from. And the best part about it is the reviews. If I click on any one of these prop firms, it will give me a full-blown trustworthy review of someone that has passed a funded account and also have received payout. So moving forward, if I ever have any sort of interest into expanding my horizon to allocate more funds from Prop Firm Capital, I would always use Prop Firm Match to search for a new company. If you are interested, I'll leave a link to this website in the description of this video. Now, just to start, always, we do a blank chart, and I'm looking at the daily for Bitcoin and Ethereum. Blank on my left for Bitcoin, and on my right is Ethereum. So just mark up your charts, see if you can annotate price as to how I annotated it, and I'll show you in the next slide. So if you had your annotations out properly, this is what we were working with on Bitcoin. You can see that we had our complete strength indicator out of Bitcoin compared to ETH. We had the lower lows set here, lower low, and lower low inside of this daily internal range liquidity pool, with ETH running previous daily low and Bitcoin failing here. Bitcoin higher low, running these sell side liquidity pool lows into the monthly bullish for value gap. So we're looking at price referencing this monthly key level, framing a daily market maker buy model on both Bitcoin and Ethereum. So when price reached that monthly internal range liquidity pool, price then reacted off of it in a bullish manner, taking out this external range high, retracing into an internal range liquidity pool, creating SMT divergence inside of that internal range, and then expanding. Once we expanded, price then took out this high, which is us trading and leading into a mitigation block, looking for PD arrays to form inside of this zone. And this corresponding high and this area in price is what we're going to be focusing on as we have compared it to Ethereum, because you could see inside of here, price is trading inside of this daily internal range liquidity pool. But the thing is that we wanted to pay attention to was the SMT being created inside of those POIs. We had Bitcoin failing to run previous daily low while tagging this daily bullish order block inside of this mitigation block, while Ethereum took out previous daily low, creating SMT inside of that daily internal range liquidity pool. So we had both bullish indications on Bitcoin and ETH for higher prices. Now do the same thing on the hourly chart like we did on the daily, and use that area and price that I was talking about of the reaction from the daily bullish order block and the daily internal range liquidity pool on Ethereum, and see if your annotations can match mine on the next slide. So here is our daily bullish order block, and this is our daily internal range liquidity pool on Ethereum. You can see already that price is prioritizing us in a long position for Bitcoin compared to ETH, because Bitcoin has been making the higher lows compared to ETH making the lower lows. So SMT divergence is already tipping our hands to say we're longing Bitcoin, not Ethereum. So I am going to be watching the reaction off of the daily bullish order block inside of that mitigation block POI for us to capitalize on a entry for us to go long on BTC. So in order for us to continue further here, what we need to happen is after price creates its SMT divergence, we want to pay attention to the down close candle that swept all of the short-term lows that created the SMT. That is going to be labeled as your intermediate term low / high probability bullish order block. So what we do is we wait for the candle to close above this down close, which would confirm our change in state of delivery. So that is what we need to do next in order for us to actually get an entry opportunity to go long on Bitcoin. So boom, our next candle that we had on the hourly chart, because we're doing daily to 1 hour, it closed above that down close. So now we have a confirmed change in state of delivery, and what I can do is set my limit at the down close candle tag for a entry point for our long position, for my stop loss placed at the SMT that created the low, and then my take profit would be a 1 to 2 to the buy side liquidity pool that I could take off 80% of my position and then leave 20% resting to external range targets. And as simple as I explained it, price tagged the hourly bullish order block, the one that created the SMT and ran all the short-term lows. So this was our labeled intermediate term low and our high probability bullish order block. So when price tagged it, we had an impulse off, a deep retracement, still keeping our stop loss intact and in place for then us to expand, moving into the New York session, taking out the resting buy side liquidity pool, which for Ethereum was just the daily internal to external range move that Bitcoin just followed in sympathy. So what happened, what I did was, this was a 1 to 2 risk to reward. I closed 1.8% of my position, and I left 20% of it running to external range targets, aka I'm leaving my position until all-time highs objective point. Because how I'm framing this trade is because I'm using a monthly key level and I'm framing a daily market maker buy model off of that. And this market maker buy model, since this is clear sell side of the curve, we're moving into the buy side of the curve. We had price have its smart money reversal inside of the monthly gap. Price then expanded, giving us our low risk buy inside of that internal range liquidity pool. Then price expands. Now we are a part of the accumulation stage of this market maker buy model. Now what we're anticipating next is price to have reaccumulation, potentially create a daily bullish fair value gap, create more SMT with Ethereum, and then expand, finally completing us to taking out all-time highs roughly at about 74,000. And this is why it's honestly so important to leave a position of your long or short running in any trade that you take to higher time frame targets, because you could see if I closed my full position at the resting highs, I would have left so much profit on the table, which is why I always follow through strict with 1.8% off of the table, and then I leave 0.2% running to external range targets, especially when I'm so confident in a higher time frame draw on liquidity, which is another reason why, like, if you guys haven't watched my previous video on how to perfect your swing trading, you want to basically put yourself in alignment with higher time frame order flow. And the daily and the monthly has been bullish for quite some time now. So if I'm going to enter on the hourly, I'm trying to keep myself in sync with higher time frame flow of the market. So therefore, I'm just going to let my position run to these higher time frame objective points. I'm not letting money get pushed away off the table. And you can see here is my execution where I entered off of that hourly bullish order block, and then I had my actual take profit point for 2 positions. I had my first initial partial at this resting high, and then my next position I just closed it at the 70,000 mark, and then now I just have the rest of the position resting break even to all-time high targets. And you can see this was the call in the Discord, and some of the members that took the actual trade couldn't fit the rest of the screenshots, but it was definitely a good and clean setup with exactly as to how we mapped it out. But moving forward, when you guys see any trade breakdown that I take, it is going to be exactly structured as such, with higher time frame key level tags, SMT divergence, with either a failure of running previous daily low or failure of running previous weekly low, and then seeking for that intermediate term perspective, intermediate term lows or intermediate term highs to form that create SMT. And my entries will be based off of after that, off of the order block or the fair value gaps. And you'll see the repetition and the process and the model repeat itself week in and week out, and you'll see the simplicity as to how the market truly books price to these liquidity pool objective points. But I hope you guys enjoyed the video and you learned something new, but I look forward to seeing you guys in the next upload.